Today is Tuesday, February 9th. Market has just opened up. Japan cratered overnight. Let's take a look at the S&P 500. Just a little nuts and bolts technical analysis and line drawing. First thing you notice here is I put a support level at 1867. To me, that's what the daily close support level has been like for the last couple of months, actually going back in 2014. Basic support broken right now. Is it significant yet? Don't know yet. This was the Ebola panic, little dip down and recovery. Down here there was a summer flash crash last summer. Anyway, I think the best line is drawn right here at 1867, and right now with the S&P trading around 1835. It's below that, of course. So let's put in some trend lines. Real simple, nothing fancy at all here. And I will explain why I'm putting the line right where it is. Why am I ignoring that? That's real trading, but I am ignoring it because there's many other times that the market touched this trend line as I put it in here. You can see that. Last year as well. And then look what's going on over here with the bounce hitting the trend line from below. So I think this is a great place to put a long-term trend line. So again, we have a breakdown of support, we have a breakdown of long-term trend. Let's put some more lines on this thing. Now, you might say this is a head and shoulders pattern. It's not the textbook pattern, but it does have the same feel to it. And if you notice, momentum indicators, if you were to put them on, would also confirm that this is some sort of topping pattern. So what I'm going to do now is just drop a line from the high down to this level here. That's just the height of the head and shoulders. I'm going to pick it up and I'm going to put it down here right from the breakdown point, right below this 1867 support. And then what I'm going to do is just put a line in there to know where we are on the chart. Let me just throw a horizontal because that's fast. And there you go. So that would be the downside target for a breakdown of this head and shoulders pattern, or breakdown, even if you don't like a head and shoulders, just a trading range. That would be the breakdown target in this area here. All right, now let's go a little bit further. How does that match? How does that fit into the context of this whole bull market since 2009? Now I'm going to do a Fibonacci over here, just the basic retracements, nothing fancy. From there to there. I'm going to get out of the way now, and you can see that the target line that I drew before, not too far from that 38.2% retracement. So that would be my target area for a bear market, or at least a significant drawdown from where we are right now. Is that going to happen? I'm not confirming that, but this is just the framework I have in place so that I know what's going on and I can act accordingly within my framework.